From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 2nd, 2017. Today we have some significant news out of the US with jobs data. So in today's video, I'm going to do a general overview of a few currency pairs that include the US dollar in anticipation of this news. And I'm going to highlight some of the key levels that we want to watch and look for entry and exit opportunities in anticipation of that news, whichever way it goes. Now, I think the general consensus is that we might look for a strong jobs report, which would point to interest rate changes later on this month. So if that's the case, we might look for a significant boost for the US dollar and a rally for the US dollar. If you look here on the USD CHF, we have not seen a rally on the US dollar. In fact, over the past several weeks, it has been a sell-off of the US dollar, causing this to fall from the 1.0100 level all the way down into the 96s. So it's been a significant sell-off. If we get a positive, strongly positive jobs number, and it points towards or leads us towards believing that there will be an interest rate change this month, we might look for the turn back higher, at least a bump higher from the yellow shaded area, 9,700 at the bottom of the chart, back to the green zone, and of course above 9,800 and the green shaded area may signal a reversal, as we might look for a new high to be made above that high there. So that's what we'll be looking for. Positive number, we see it pushed back through or above 9,700, the yellow zone. Let's go ahead and put an arrow there. And then we look for it to rally towards the green zone, of course, as our last resistance high. And anything significantly above there, we could be looking for further reversal back higher again for the dollar franc. Now, if it's not what we anticipate, if it's a poor number and it gives us caution about the interest rate change, then we may look for the market to turn back underneath 97 and restart the free fall that it's been in for the past couple of weeks. So those are the things that we want to watch for. I've closed all of my dollar short trades. I was in a few dollar short trades. I was specifically here on the dollar franc I was short. So I've closed those in anticipation of potential that we might see a good positive number today out of the US. Take it down to the 4-hour time frame. It won't really change our minds about this. We do see that the market's kind of gone stagnant here inside the yellow shaded area just above 97 for the past several hours. So again, that may be that anticipation of positive jobs data. The fall has stalled out. We do see historical support around this as well, where the black circles are. So above 97, 97.30, we may look for the target back to the green zone or higher. If it breaks that last high, I think we could even see it move higher. And that would be a strong positive number and pointing and alluding towards a change of interest rates later on this month. Otherwise, negative number back underneath 97 sends this back down again. Euro, similar but opposite. Of course, we've seen the market stall out here in the congestion zone between the pink and the orange zone inside the black box at the top of the chart. A good strong positive number. We may look for the breakdown of the pink shaded area, maybe even the black trend line, and the beginnings of a reversal phase, a downtrend phase here for this currency pair. It has been clearly in an uptrend. On the opposite side, if we see the breakout to the top side and the orange shaded area, and that is 112.60, 112.80, we might look for this to begin another leg of the uptrend. So negative data sends it higher, positive sends it lower, as long as it's a strong number and it alludes to those interest rate changes later on this month. GBPUSD, similar situation. We've seen the breakdown of this blue trend line. Broke the blue trend line, broke the rising channel, and it's just been bouncing around a little bit over the past several days. We know we have the election polling data that has caused some controversy here on the GBP pairs, and of course that could continue until June 8th. But if it's a dollar-driven move, I think it's very interesting. We're underneath the blue trend line, black trend line. In fact, earlier this week we had a pending order up into the 129.30 level. Never got taken in the green shaded area. Now we're just waiting for the next opportunity. I think if this goes significantly bearish, underneath the orange zone will be the breakout. You see the support here and here. 2770, 2800 underneath the orange zone, breakout, and we look for a reversal for this currency pair. The CAD, we have a little bit of a different story here. Of course, US dollar will drive this higher if it's a positive number. And we've also seen this highly influenced by oil. Oil took a significant dive yesterday. Here's the Brent oil price. Took a significant dive yesterday, even though it looked like it was going to break 51 or so here. Turned right back around and went back down. So that significant dive gave the rise to the U.S. CAD. And if we get positive data out of the U.S., another push higher could be anticipated here. And breaking through that yellow shaded area is really what we're watching for as an opportunity for longs on the dollar CAD. US yen has been on the rise, so a positive move for the US dollar may see a final breakout above this range or congestion zone that we've been in, above the green zone, 111.75.95. We could be looking for some further reversal for the dollar CAD, or sorry, the dollar yen. So we move on over to the AUD/USD. It's already been on the fall. A good positive move for the US dollar. Likely breaks down 73.75 and continues this free fall that it's been in this week. And lastly, the New Zealand dollar. We have seen this on the rise. So a positive number for the US would actually be against this short-term uptrend that we're seeing. That would cause a positive move for the U.S., would likely see it push back underneath the blue zone, back underneath the 100-period moving average and the blue trend line. So we definitely want to watch that as a potential. If you've been in longs from the blue shaded area and above the moving average, again, I've closed all my dollar short trades. That was the buy that we took earlier this week on the New Zealand dollar. But if you've been in the long, protect profit. I've closed my trade because a good strong dollar positive number may see another turn lower here for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.